Right now, folks, we're going to jump over to our man, Teddy Kekstadt. Folks, you can check out Teddy's outstanding Tiger Forex Report. He's got new issues every Monday. Updates throughout the week when warranted, folks. You gain access to an archive webinar in there as well. It's only $97 for the month, folks. It comes with a 30-day money-back guarantee. Check that out right under the newsletter tab. And don't forget, under the services tab, a couple of great webinars. Capitalizing on time with calendar stock option spreads, $97, and Japanese candlestick pattern stock and option strategies right there under the services tab, folks. Two great webinars. You gain access to them. You can watch them as many times as you like when you purchase them, though, right on your account page. Teddy Kekstadt, good morning.
Good morning, Tommy.
So, where do we kick things off, man? We got 2 weeks until another Fed meeting. I know we had Jackson Hole since the last time we talked. And what do you think about this market, Teddy? What are you looking at, please?
Well, for the currencies, I think it's going to be a flatline trade until after the Fed meeting. It's going to be a very boring next 2 weeks.
All right. So what do we do as traders?
Well, as traders, you got to wait for a valid signal is what you do. You know, I mean, there's a little bit of swing going on in the Aussie and what have you, but for the most part, you know, we're in a holiday week to begin with. So Monday was a dead trade. Sunday night into Monday, you know, we didn't really start to get the currencies moving or any of the markets moving for us until you know, late on Monday morning, early Tuesday or late Monday night, early Tuesday morning. And today so far is pretty quiet. You know, I mean, the expectations are waiting on the Fed. You know, yields pumped up a little bit, you know, this week a little bit, you know, are leaning towards going a little higher right now. But it's pressure right now. I think they're just, you know, testing the barriers of the range that they've been in right now. There's no fundamental or technical reason for any of the currencies to really break out one way or the other. You know, everybody's waiting on the interest rate moves. And then the question is, are other central banks going to also act in tandem? So, which is that's a nullifying effect also. So,
sure.
So we'll see what happens. You know, I think, you know, that we just right now things are too vague as far as trying to set a trend. You know, I mean, this is a very tough period. You know, when markets are in range trading conditions, you know, I mean, everybody wants to make money every day, but, you know, trading is an average over time. You can't look at it on a daily, weekly, or monthly basis. You know, I mean, you go through periods like this. You have lulls, you know. I mean, granted, it was summertime. I wouldn't say we had a summertime trade necessarily. It's just it's a conditional thing. You know, fundamentally, too, you have a lot of cancellation effects. So, you know, we have the fundamental factor with interest rates that's looming right now. We know that fundamentally, once they start cutting rates, that should suppress the U.S. dollar a little bit, as well as, you know, obviously lift bond prices and what have you. Then we'll start to have a little bit of a trend. Until they start doing that, you know, we're hanging. You know, there's nothing to really drive, you know, the economic numbers. If they were to start moving towards extremes, whether it was positive or negative, then perhaps we can spark a trend and start, you know, getting some sort of at least short-term moves in place. But right now, there's just no reason. Now, the good thing is that, especially for the currencies, you know, currencies tend to trend 70% of the time. Well, they've been going sideways now for, you know, pretty much 5-6 months for the most part. You know, some of them are trending. I mean, the U.S., for instance, look at the U.S. dollar Swiss. It has been trending lower, but it's been a very lazy bear. You know, I mean, it's a sell rally forecast, but it's, you know, to the downside, it's a grind. You know, so yeah, to work the short end on that trade, it's a good idea, but you have to keep your expectations rational. You're not the move that you might wish to occur over the course of a few days or even a week or two. It's going to take a whole month. You know what I mean? So. Yeah. And that's where you have to start weighing. You know, trading is about making money. It's not about participating every day. You know, I mean, the key to success in trading is maximizing your risk-reward ratio. You know, it's like I tell people, you know, right now, I'm used to trade. When I put on a trade, my expectations are to make 3 to 5 to 1 dollar that I risk. And I tell people, you know, right now it's the opposite. I'm like, I'm not going to lay $5 to make 1. I mean, I encourage other people to do that out there, honestly, because it helps people like me make money easily. You know, I think it's the dumbest thing you can do, but then I don't care what people do. I really don't.
Sure.
You know, I care about whether I make money or not. I mean, I wish everybody would make money and do the right thing, but let's be realistic. That the only reason that we can pull money out of the market is because of people making mistakes. You know,
how do you make money to every trade, right?
Right. How do you make money at a poker table off of other people's mistakes?
Yeah.
predominantly, right?
You're not making it off the house.
No, you're not making. Yeah, you're not making it off the house.
Exactly. No.
So I mean, and that's just how it is. It's an environment. I mean, for instance, look at the Japanese yen. At least if the crude oil market would be swinging around, we would get a little action there. We can't even get the crude market to move. I mean, so it's like you have multiple markets that have gone into flatline that actually help.
Can I just right there, because and I understand it so well, and I asked you to explain it so many times, but you do it. When you talk about that, can you just elaborate when you say, if the crude market get going and then the yen? Because we always get new listeners. Just, we got a couple minutes, man, because I think that one alone, if you could tell the viewers why, if crude's going to catch a bid, what's going to happen to the yen when it comes to the dollar? Yeah.
Sure. Okay, so like for instance, we're talking about this sideways trade. Crude is a great thing to look for that currency. We know that if crude starts to, for instance, catch a bid, and start rallying, okay, then that's going to suppress the yen. So that means the U.S. dollar yen trade should get a nice bullish spike off of that. It's an inverse relationship, just like you have with interest rates. Versus like right now, as a whole, I'm a bear on crude oil, even though it's been going up for the past 2 weeks. It's only coming off of its lows. It's coming off a lower move low. And right now it seems to be making a lower move high, which is indicative of a lower trend. If that's the case, as crude oil continues to go down, that strengthens the yen, which means the U.S. dollar yen trade should trend lower as well, fundamentally because of that, because the interest rate variable is doing nothing. So the crude would help to the bears in that case, which means if you're a bear for the U.S. dollar yen right now, then you have an edge. So that if all of a sudden, like crude oil is down today, if it starts to take out, say, yesterday's low today or tomorrow, and it goes into Friday with that, you should expect to see the U.S. dollar yen trade a little bit lower, meaning a weaker dollar, stronger yen because of that functionality. So the cause, and the main reason is because Japan is oil dependent. They don't produce oil, so the price of oil and it's also traded in dollars predominantly. So they have to move yen to convert yen to dollars to buy crude. So all these fundamentals come into play, and that's how you can help at least guide a short-term trade. And that's one of the markets where right now I am eyeballing the yen and watching crude. Like for instance, yesterday was a nice little rally that happened in crude oil. Okay, so that one right there, that's a situation where you look at what happened with the U.S. dollar yen. The U.S. dollar yen also got that rally. You know what I'm saying? So that's why you look at a day like yesterday. The other currencies moved a little bit because you were coming off of a holiday market, but they really moved and died, whereas the U.S. dollar yen actually had a trade because oil was moving. And that's where trading is patience. So you have to wait for those things to get a valid signal, and then you can make some money. Otherwise, you know what you do? Go play golf, go wash your car, or do whatever.
Patience, folks. I love that. I love that walkthrough, man. The first time you taught me that just even changed the way I think about the entire market, man. So I appreciate it.
Right.
Teddy,
and
thanks so much, man.
Money, just send me a check.
Not happening, right? We'll talk to you next week. Thank you again, Teddy. Folks, check out the Tiger Forex Report. We're coming right back.